Talking about positions that you really like, let's go to Sector Spotlight, which is going to be oil today. And the reason why we're hitting on oil is because of Goldman Sachs' bullish note that came out on Tuesday, and we want to really dissect it for you. So on the surface, it said that prices could come off a bit due to lack of demand, but eventually supply constraints will catch up with demand, and we're looking at Brent crude at 130 in 12 months and WTI at 126.50 in 12 months. So first off, before we get to the specific sectors, what was your takeaway from this note? Do you agree with this bullish call?
I like the tactical call. I like that they made a call long after a pull-in versus after a big move higher, the same way they said to lighten up when we were up there. So they're being a little bit more prudent. I do think that 96 has been holding for oil. If that continues to hold and we create a new floor, we will see those prices down the road. But if all of a sudden, the dollar starts to really rally and the European woes continue, we might see it break 96 and we could see 88 before we see those higher prices. So I'm still going to watch my levels and just know what they're talking about, but I'm not going to use that as my end-all holy grail of information.
But I do think that there is some trading opportunity off of this note, and I want to talk about the buys first. In my mind, if we do see a supply and demand constraint here, we're going to have to drill. Which leads me to the oil services, which all got a big bounce yesterday except for Weatherford. Right. And I wondered if the chart showed any sort of buying opportunity for this sector.
Well, first let's talk about the OAHs. The OAHs was a great group when commodities were hot. It was our go-to area until it broke that upper range. So if you sold into that strength, this is a time to maybe nibble a little bit in this lower range, but you have to watch this lower range close. So if you look at the OAHs here, you will see that this was when it failed at the highs. Now we've had a decent move lower. We're holding support here. So if we do hold this support, and this is the support that holds, you have to be in the tier 1. Traders are going to look to add if you can get above this 150 and hold for at least a bounce back to 155. But if the market doesn't hold this area and we break 1303 and go down to 1295, we're going to see the 200-day in these OAHs, and that leads us to 138. That's why you only want to be in a tier 1 at this level if you like this group.
Tier 1, lightly invested. Okay, so I want to hit on Weatherford, though. I know you don't like this chart, but I want to see if this was the one that didn't hold up, but there's actually a buying opportunity.
Let's take a look. Weatherford. Okay, we'll take a look here. This one, this is one of the first ones to break down. You had a big gap down retest. It's coming into support. I probably wouldn't be interested in this until it breaks this downtrend here at around $20.
Okay, then let's go to Halliburton because it did get an upgrade today. It did really, really well on Tuesday. What's the chart telling you with that one?
This is one of the leaders. I'd rather see you go with a Halliburton or maybe a Schlumberger. If you take a quick look
at Baker Hughes, which is the cheapest.
This is true as well. This is trying to hold this 45 level, perking up a little bit. I don't love it. At least it's above the moving averages. If you have to be in a stock in this group, I do like Halliburton as well.
Okay, and I just want to think about another trade as well, because if we do see the spread between Brent and WTI lessen, that is going to be bearish for the refiners, in my opinion. So I wonder what you thought that would be a sell signal for, like the Valero, Tesoro, Marathon Oil.
Well, let's take a look at Valero. I'll tell you what I think the technicals are telling me here. Valero, it looks sort of like stocks in the other group here. It's coming into support. Dribbling lower, below the moving averages. Could see the 200-day also, but if it starts to get above this area, which is I think about 27, it could see a move up. It's not that compelling, but it just looks like the other ones actually.
Okay, and let's go to the integrateds real quick to wrap up, because I feel like it's kind of mixed, right? Because they're going to have to ramp up production, so that could be good for a Hess that had great production last quarter. But on the flip side, their margins for the refining businesses are going to lessen as well if we do see that spread shrink. What would you say about a Hess?
Let's take a quick look. What's that, HES?
Yeah.
All right, HES also below the moving averages, came a little bit off support. As far as a trade, I think if you got in a tier 1, that's all you should be in. If it starts to break above this level of about 78, maybe it sees 80, but this also is going to need some time. And I typically like to go with Exxon or Chevron, not Hess.
Leaders, right?
But it is the same